Hey there, ever wondered why some people say the economy is booming while others swear we're heading for a crash? You scroll through your feed and it's full of contradictory headlines. One says record stock market highs, while another screams layoffs are surging. So what even is the economy really? Is it just Wall Street? Is it your paycheck? Is it GDP, inflation, or some magical money machine behind closed doors? Don't worry, by the end of this video, you'll finally get it. And trust me, it's not as boring or complicated as it sounds. Let's break it down. Let's start with the basics. What is the economy? In simple terms, the economy is just how money flows through a society. It's how people earn money, spend money, save money, and invest money. It includes everything from the cup of coffee you buy on your way to work to the construction of a new airport. Every product, every job, every service, all of it adds up to what we call the economy. And we measure this activity through a number called GDP, Gross Domestic Product. In 2024, the US GDP was about $28 trillion. That's the total value of everything produced in the US economy, from iPhones to insurance policies. Now, you might think if the GDP is growing, then things must be great, right? Not always. GDP only tells you how big the economic pie is, not how it's sliced. For example, in early 2024, US GDP grew by 2.5%, but real wages, what people actually earn after adjusting for inflation, were flat. So the economy can grow while regular people feel like they're falling behind. That's why we also need to look at indicators like unemployment, inflation, consumer confidence, and even inequality to get the full picture. Let's talk about jobs. In March 2025, the US unemployment rate stood at 4.2%, historically low. Sounds good, right? But here's the twist. Many of those jobs were part-time or gig work. And while tech companies posted record profits, companies like Google, Meta, and Amazon laid off tens of thousands of workers in Q1 2025. So a low unemployment rate doesn't always mean economic stability. It can hide underemployment, job insecurity, and wage stagnation. Now, let's talk inflation. Inflation is when prices rise over time, and in 2022 and 2023, it hit record highs. In June 2022, US inflation peaked at 9.1%. That's the highest in 40 years. Since then, the Federal Reserve raised interest rates aggressively, from near zero to over 5.25% by late 2023. As of April 2025, inflation has cooled to around 3.2%. But it's still above the Fed's 2% target. And those rate hikes, they've made borrowing more expensive. Mortgage rates are above 6.7%, and credit card interest is hovering around 20%. So even if prices aren't skyrocketing anymore, people are still feeling squeezed. Let's not forget the stock market. The S&P 500 hit a new all-time high in February 2025. Crossing 5,200 points. That's great if you have investments, but here's the problem. About 90% of stocks are owned by the top 10% of Americans. So when CNBC celebrates a market rally, it might not mean much to the average person struggling to pay rent or groceries. The economy might be winning on paper, but not in your wallet. Okay, let's take a breather. So far, we've covered GDP, jobs, inflation, interest rates, and the stock market. But there's another major piece of the puzzle: government spending. In fiscal year 2024, the US government spent about $6.4 trillion and brought in about $4.8 trillion in revenue. That's more than the entire US economy produces in a year. Some economists argue that high debt levels are sustainable if the economy keeps growing. Others warn it could lead to future inflation or limit spending on essentials like healthcare or infrastructure. Either way, government policy has a massive impact on the economy. Now, let's zoom out. The global economy is shifting fast. China's growth is slowing from double digits a decade ago to just 4.5% in 2024. Europe is grappling with energy shocks driven by conflicts and supply chain issues, and emerging economies like India and Indonesia are rising stars, with India projected to become the world's third largest economy by 2027. So when we talk about the economy, we're not just talking about your town or your country. We're talking about a complex web of global trade, capital flows, and international politics. Here's something else you should know. Not everything that counts gets counted. GDP doesn't measure unpaid labor, like parenting or volunteering. It doesn't measure happiness, environmental health, or financial stress. Two countries could have the same GDP, but totally different standards of living. That's why newer metrics like the Human Development Index or gross national happiness are gaining traction. So after all that, what even is the economy really? It's a living system, constantly moving, shaped by policies, people, and unpredictable events. It's the job you have, the rent you pay, the price of eggs, the stock market swings, and yes, even those boring Fed announcements. It's not one number or headline. It's everything happening around you that affects how you live, work, and plan for your future. So next time someone throws a headline at you like, "The economy is on fire," ask yourself, whose economy? Because the truth is, there's no single version of the economy. There's the Wall Street economy, the Main Street economy, the global economy, and your personal economy. And understanding how they all connect, that's how you stop being confused and start being financially smart. Thanks for watching. If you want a breakdown on what GDP, interest rates, or the Fed actually do behind the scenes, drop a comment below. See you in the next one.